Over IRS Form 1099 INT, interest income. So taxpayers are probably familiar with this tax form in that you usually get it from your financial institution at the end of the tax year, specifically if you've if they are reporting that they've paid you more than $10 in either interest income on box 1, interest on U.S. savings bonds and treasury obligations on box 3, or tax-exempt interest on box 8. They're also required to issue this tax form in certain other instances that are covered in the instructions for Schedule B of your tax return. So we'll go through this tax form so that you can understand what you should expect to see and how you should report it on your tax return. There are 5 different copies of Form 1099 INT. So let's just briefly go through the form that you should not expect to see would be copy A that goes to the IRS. Then there is copy 1 for your state tax department. Copy B is the copy that you should expect to receive. Copy 2 is the version that you would also receive, and you should file it with your state income tax return as required. And then finally, copy C is retained by the financial institution or the payer for their records. So we're going to go through the example that's on copy B. That's the copy that you should expect to receive. If you live in a state that does not have a state income tax, then copies 1 and 2 are probably optional in that you should not expect to receive them. So in this form, the taxpayer information is on the left-hand side. It contains the institution's tax information as well as your own. So in this case, our hero John Doe received interest income from his bank, Acme Financial Institution. You'll see their full taxpayer ID on his taxpayer ID. That is a truncated number. However, on the copy A that goes to the Internal Revenue Service, they will report your full taxpayer ID number. And then you should see your name and address here in the bottom of the left-hand side. If you've recently changed your address, you may wish to update the IRS of your address change. You can do so by filing IRS Form 8822, which is the change of address form. We'll put a link to that article that we've written on that in our show notes. Down here, this checkbox is called the FATCA filing requirement. So this is the Foreign Account Tax Compliance Act, I believe. And that is a reporting requirement for financial institutions regarding foreign accounts. So if you see this form, if you see this checked, you may also have a reporting requirement depending on whether or not you hold any foreign assets. But they will check this if they are holding assets, if that is to comply with FATCA filing requirements. If it's blank, you don't need to worry about it. And then down here in the bottom left is the account number. Financial institutions are required to list an account number if they are issuing more than one version of a Form 1099 to the same taxpayer regarding 2 different accounts. So in this case, you would see, a checking account maybe, and then a savings account, something like that. So this is an option. So we're going to go to the right-hand side. The routing number, what you would see, the 9-digit number that's on your checkbook. This would be the number that they can put in there if they so choose. It is an optional field and it's not really pertinent to your income tax return. So in line 1, we're going to see interest income that was reported during the tax year. This generally is considered to be ordinary income. If it's above $1,500, then you must file form or Schedule B to report it. There are also other instances where you may need to file Schedule B. We cover that in a little bit more detail in our article. So we'll put a link to our article in the show notes. Box 2, if it contains anything, means that it's an early withdrawal penalty. For example, if you had a 1-year CD and you redeemed it at the 6-month mark, then the bank or the financial institution could give you an early withdrawal penalty, which may be deductible on your income tax return. If so, you would report that as an above the line deduction on Schedule 1, adjustments to additional income and adjustments to income. This would be considered an adjustment to income, which is calculated to arrive at adjusted gross income, as opposed to deductions from adjusted gross income, which are reported on Schedule A. Line 3 or box 3 contains interest on either U.S. savings bonds or other Treasury obligations such as T-bills, Treasury bonds, Treasury notes. This may be taxable at the federal level. It's generally exempt from state or local income tax. It can be excluded in certain instances. Probably the most common example is certain Treasury bonds that are redeemed for qualified education expenses. Under certain circumstances, they can be excluded from taxable income if they meet certain requirements. And if that's the case, then you would file a tax form to accompany that. We do discuss that in a little bit more depth in our article. We'll put a link to that form as well. Box 4 generally will be blank for taxpayers who are not subject to withholding. What's known as backup withholding applies in any case where the financial institution or the payer does not have your correct tax ID number. So your tax ID number can be your social security number, individual taxpayer ID number, it can be an adoption taxpayer ID number, or it can be an employer identification number. If you do not have one on file, they may request that you complete IRS Form W9. That is the form that you would file to provide your tax ID number. And if they don't have it on file, or if they have an incorrect version and they've previously been notified by the IRS, then they are required to withhold a certain percentage of your income paid out. I believe that is 24% of your income. So if you had $1,000 of interest income, they would have to withhold $240 here. But if it's blank, in this case, John Doe is not subject to backup withholding, so they're going to pay him the interest and then he reports it as appropriate on his tax return. Box 5 contains investment expenses. This will usually be blank unless you're investing in real estate mortgage investment conduits or remix. 99% of you probably don't know what that is, and that's perfectly fine. For your Form 1099 INT, this will probably be blank. Otherwise, this is your share of investment expenses of a single class REMIC, and this has already been included in your interest income, so it's not tax deductible anywhere on your tax return. Box 6 and 7 have to do with foreign taxes that may have been paid on interest income, fixed interest instruments that you held but were issued by a foreign country or a U.S. possession. So For example, this would indicate that $200 of foreign taxes were withheld. They were paid to the U.S. Virgin Islands, or it could be to France, let's say. So that means basically you were holding some French bonds and you paid foreign tax to the French government. You may be able to claim this as an itemized deduction on Schedule A. You may also be able to take a tax credit on IRS Form 1116, which is the foreign tax credit form. We'll put links to those in the show notes as well. In box 8, they're reporting any tax exempt interest. This could be like municipal bonds, for example, is the most common type of tax exempt interest item. So this is reported on your tax return under line 2A, and it does count towards your income in certain circumstances, such as modified adjusted gross income for different purposes. Social Security Administration takes that into consideration for the IRMA, which is the income related medical adjustment amount, Medicare adjustment amount. So if you're on Medicare and your income is above a certain threshold, the SSA may tack on an additional surcharge on your monthly Medicare premiums. Tax exempt interest, which goes in the line 2A of your 1040 or Form 1040 SR, is part of that calculation. And it's part of other modified adjusted gross income calculations. In box 9, specified private activity bond interest. This would be tax exempt interest. However, it is also considered a preference item for alternative minimum tax calculations. So if you're subject to AMT, you may need to report this on IRS Form 6251 and use that in helping to determine your AMT liability. In box 10 and box 11, this is the discount versus bond premium. So if you're buying like brokered CDs or brokered fixed income instruments, the box 10 amount is the discount. So if you had a $1,000 face value bond that you bought for $900, then the discount would be $100. And then conversely, if you had something with a face value of $1,000 and you paid $1,200, then that would be the bond premium. So generally speaking, the market discount is considered taxable income as it's reported. And there are certain reporting criteria that instruct your payer on how much of your market discount they report on your Form 1099 each year. If you want, you can go into more details in our article to learn a little bit more about that. And then conversely, if you paid a bond premium during the tax year, then you may need to refer to Schedule B to determine how much of this the interest would be includable in your tax return. So in box 12, this is the bond premium for Treasury obligations. And again, Schedule B contains instructions on how you would report that on your tax return. For box 13, a bond premium on a tax-exempt bond. So if there's an amount that's shown here, you would go to IRS Publication 550, which is Investment Income and Expenses, to determine how much of this tax-exempt interest is reportable on your tax return. If you have tax-exempt covered security that you paid a premium for, but there's nothing in box 13, then that means they've already netted out that premium on either box 8 or box 9, whichever applies. So in this situation, I just put random dollar amounts here. None of these are related to each other, so you can use this example for illustrative purposes, but not to draw a conclusion between the relationship between box 13 and the box 8 or 9. And then if this amount is greater than the amount of interest that was paid, then the difference is a non-deductible loss. Sorry. Box 14, you'll see the QSIP number, which is the number tied to a specific fixed income instrument for any tax exempt or tax credit bonds. And then lines 15 through 17 would be state tax information. So obviously Texas is an income tax free state. You would not actually see this on a Form 1099, but as an illustrative example, we've put the state. If there's an identification number that's tied to the institution, that would be on there, and then the amount of state tax withheld, which you may or may not be able to deduct on your state tax return. Let's see. There are 2 spots. So if you have income that you report to 2 different states, then you would see up to 2 different states here. So, and again, generally your financial institution is required to issue this to anyone where they've issued more than $10 in interest in either box 1, box 3, or box 8, or if they meet other certain criteria. So we do cover a little bit more depth on this tax form in our article, which you can find on our website. Simply go to teachmepersonalfinance.com, type in IRS Form 1099-INT, and you'll see the article appear. If you like our articles, please subscribe to our newsletter. And if you like our YouTube videos, please subscribe to our channel. And if you have any questions, comments, or if you have an idea for what you'd like to see in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.